Well, good afternoon. Good afternoon, everyone. I'm Steve Gregorian, President and CEO of the DEC. And geez, from the looks of the stage, it's almost like a president was coming here or something. What do you think? My goodness, welcome to the first meeting of 2026. It's 92 years of incredible speakers and networking, and that tradition continues today. Especially want to welcome our DEC members. If you're not a DEC member, of course, we'd love for you to be one. I always say your next prospect, client, job, best friend is right in this room. If you want to build your network and learn from thought leaders on stage, invest in you and join today. And you can do that right on our website, econclub.org. As we get started, please take a moment to silence your cell phone so we don't disturb the program. And of course, if you've been with us before, you know we always get started with a pledge and a prayer. So please stand and join me as we honor our country with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Kindly remain standing. Our invocation today will be delivered by Father John Phelps, President and CEO of Life Directions. Father John, come on up.
Good morning. We're on a journey. We're in a boat. We're going to the other side. We may not know what's going to be there, but what we do there is in the hands of who we are. I pray for the vulnerable and the voiceless. I pray that we have a heart and not just a mind that thinks of them. I pray that hope is the reason we're in the boat. And I pray that peace unfolds in every interdependent relationship. May we bridge our way, once we're there, to network relationships so that the course of what we do will be for the sake of our children and our children's children, especially the ones who are vulnerable and voiceless. Amen.
Thank you, Father. You may all be seated. A couple of special thank yous. Thanks to WDIV Local 4, Detroit PBS, for live streaming today's meetings. Thanks to WJR, who's doing their focus show live from the ballroom. And thanks to Lawrence Technological University for your video services. Of course, students are here today and always, courtesy of our generous corporate sponsors. Their morning already began with an awesome private reception with our panel. I want to take a moment and let you know who's with us, but please hold your applause. Today we've got students from Marion High School, thanks to Angie and EY, Eastern Michigan University, thanks to Rick Hampson, Old National Bank, Northville High School, thanks to KeyBank, University Prep High School, thanks to AAA, and St. Catherine's Academy, thanks to Carolyn and Michigan Women for it. How about a round of applause to welcome the students? Thank the sponsors. Speaking of sponsors, I always want to take an opportunity to thank our sponsors and partners. Make no mistake, we could not do programs like today's unless we had their support. If you're interested in becoming one of those sponsors, love to talk with you. All right, we'll see you next on February 5th when we host gubernatorial candidate and Secretary of State Jocelyn Benson, and of course, tons more coming your way, including something maybe in a couple hours. So, all right, 92 years of speakers, and those speakers tell the history of our country, and January 13th was a popular date in the DEC's history. Quentin, Mary, and Gabe, you joined a distinguished list of 15 others who spoke on this day, January 13th. A couple of highlights. Professor Leo Woolman in 1947. The only reason I bring him up, his speech that day maybe parallels today's economy. It was the rising spiral of higher wages and higher prices. 1998, we hosted Reverend Jesse Jackson. 2020, Steve Forbes. Today, we're pleased to add Quentin, Mary, and Gabe as our 16th through 18th speakers on this day in DEC history. Give them a round of applause. And finally, we want you to use your smartphone, and you can be involved with today's programs, take lots of pictures, share with your social media networks. You can submit a question for our panel using a QR code you're going to see from time to time on your screens. And those questions will make their way to our presiding officer, who we're about to put to work. Rick Hampson is the Metro Detroit Market President for Old National Bank. He is a DEC board member, of course, an amazing supporter of the DEC, our city, region, and state, and me personally. Ladies and gentlemen, please welcome Rick Hampson.
All right, thank you, Steve. Good afternoon, DEC members and guests, and Happy New Year. It is my privilege to announce today's roundtable. First, Quentin Messer Jr. is Chief Executive and Economic Competitive Officer of the MEDC and Chair of the Michigan Strategic Fund. Messer is charged with executing MEDC's core mission of business development and attraction, community development, providing access to capital, and enhancing Michigan's image and brand with a focus on a strong and equitable economy for all Michiganders. Messer received a BA from Princeton University and earned his JD and MBA from Columbia University. Mary Buchseiger is the CEO of Lucerne International and Lucerne Global Solutions, headquartered in Auburn Hills, Michigan. A respected leader in global manufacturing and trade, Mary has transformed Lucerne from a regional supplier into a multinational enterprise serving major OEMs and Tier 1 suppliers across North America, Europe, and Asia. Mary is a graduate of both Kettering and Lawrence Tech University and holds a global MBA, executive MBA from Trium. Dr. Gabe Ehrlich is the director of U of M's research seminar in quantitative economics. Ehrlich oversees forecasts of the US and Michigan economies, and he presents regularly to the Michigan legislature and the governor about Michigan's economic and fiscal prospects. Gabe received his PhD in economics from the University of Michigan. Our moderator today is a familiar face to all and annually moderates this DEC meeting. Daniel Howes is senior editor and business columnist at the Detroit News. Daniel holds a bachelor's degree in history from the College of Worcester in Ohio and a master's in international affairs from Columbia University. Ladies and gentlemen, please give a warm Detroit Economic Club welcome for our roundtable. This past November and December, many of you participated in the 14th annual Michigan Economic Outlook Survey. This survey was authored by David Baker from the Baker Strategy Group in partnership with the CFI Group. Here to unveil the survey results, please welcome David Baker.
We are pleased to present the results of the 14th Annual Michigan Economic Outlook Survey. Our expert panel today will offer insight into Michigan's economy and where it may be headed in 2026. My role is simpler: present what we heard from across the state. This survey can be a complement to the robust and widely respected reporting from Research Seminar in Quantitative Economics from the University of Michigan, and represented here today in our panel. Thanks go to Steve Gregorian and the Detroit Economic Club for their ongoing support over the course of this program. Thanks also to Diane Keller, Sherry Petrus, David Ham, Don Hart, Jimmy Shao, and Brad Smith. The survey focuses on one primary goal: make Michigan a great place to grow a business. The survey always opens 1 week after Election Day with respondents coming from organizations across Michigan. For the measurement, we use a proven methodology developed by the Ann Arbor-based consulting firm CFI Group, co-founder of the American Customer Satisfaction Index. Questions are asked on a 1 to 10 scale, then translated to a 0 to 100 to generate a score. Generally, you want scores to be in the high 70s, low 80s. Think of it like a temperature. Okay, with that, let's turn to the results. This is a tracking survey asking respondents about their organization's economic outlook for the next 6 months, 12 months, and 3 years. A year ago, from 24 to 25, we saw the 6-month outlook up slightly, but the 12-month and 3-year dipped, demonstrating a little uncertainty in what we'll call the midterm or medium term. In 2026, all 3 measures improved. The 6-month outlook rose to 69, the 12-month to 72, and the 3-year jumped 3 points to 75, signaling a modest but clear return to medium-term optimism. In addition to the organizational outlook measures, we also asked a few individual perspective questions using what's called a neutral midpoint bipolar Likert scale, or a 5-point scale. Looking back at 2025, 43% viewed Michigan's economy positively versus 30% negatively. And looking ahead to 2026, that improves to 48% positive and 27% negative. As for the expected impact of the president's policies, respondents are split, but lean a little negative, with 35% positive and 55% negative. And notice how animated our respondents are to this question. Only 10% are neutral, with almost half, 45%, at the extremes. Finally, let's look at 5 tracking measures we have found to be helpful to watch over the years. Michigan, as a great state for raising a family, jumped 4 points, up from 71 to 75. A great state for professionals is up 2 points. On the right track and has a strong, vibrant economy are both up a point. Michigan, as a business-friendly, though, edged down just a couple of points to 62. Now, why might respondents see improvement in most areas but feel confident about business friendliness? Well, that's a great question for our panelists. Now, someone might be asking, can today's panel really provide valuable insight in 2026? Well, obviously, yes. But I decided to ask that question to a few AI large language models, and here's what they said. ChatGPT says, today's panel is a top-tier benchmark quality panel, highly relevant to 2026 planning. Gemini adds that they're exceptionally well-balanced, guided by a veteran journalist with deep automotive expertise. Grok notes that they're a strong, balanced mix of expertise directly tied to Michigan's economic landscape. And Claude gushes that they're well-suited to provide substantive analysis of Michigan's 2026 economic outlook. Let's go. So, without further ado, here's our top-tier panel and our veteran moderator. Thank you.
Proving that AI is intelligent or not. You're new to this panel, so what's your reaction to the survey results?
I was a little surprised by them, honestly, the optimism. We've seen Michigan decline in certain areas, education, per capita income, and I was a little shocked by the optimism of the points going up from last year.
And I thought the same thing, and when you counterpose that to the attitudes towards Trump economic policies, where it was 55%, 45%, that's a 10% delta is not insignificant.
Yeah,
and I think it really suggests something.
I question too, I feel like in Metro Detroit, we kind of live in a bubble. There's a little bubble, especially over Oakland County. So maybe that optimism is, I don't know where the surveys went into the different, different areas of Michigan, but I questioned if maybe some of those surveys came out of the bubble.
What's your reaction, Gabe?
Yeah, one thing that did resonate with me in the survey results was people are more optimistic about the longer term than the short run. Mm-hmm. And that's consistent with our forecast for Michigan's economy. So, we do expect, if you look on the calendar year, Michigan to hit a little bit of a growth pause this year in terms of the labor market, about flat in terms of payroll employment, but picking up in the back half of the year and into 2027. So I thought that was consistent with the survey results.
Quentin, you look at you're talking to prospective employers all the time, and how do you square what you're hearing from them to the survey results and what you're seeing on the ground?
You know, I think Mary and Gabe both hit on important topics. I think one, sentiment kind of lags in some cases, but it can also be a forward indicator of what people think is going to happen down the pike. I talk to people all the time who say, hey, look, we are still right now working on orders or POs that are going to hit in 2027 or 2028. So if you've already booked that revenue and you anticipate book that revenue and you've figured out a way how to manage the profitability of that revenue, you're going to feel pretty good. The second thing is, I think this is what makes Michigan and America great. There is always an internal optimism that burns. I think people, especially businessmen and businesswomen, want to believe the best. Why else would you take the risk?
Right.
So I think there's a little bit of that. And I think that the last thing of it is, I think Mary hit on this, timing, right? It's after the election. You're maybe thinking about Thanksgiving and you're excited about your family. There's so many exogenous factors. But I think the biggest thing that, from a government perspective, from an MEDC perspective, and that's why we do our own surveys, we just have to listen to the business community. We have to do that intentionally and be willing to hear sometimes unpleasant truths.
And what are they saying to you right now?
I think it all depends on your sector, but I think the three big picture messages are lack of predictability is problematic. Is that a lot of times you're going to make a decision, a major capital decision,
right,
regardless of the company's size. If you're going to invest something like 10 to 15% of your cash flow into a particular service line or hiring people, and then the policy when changes, that's problematic. The second thing is, and one of the reasons I'm wearing the hats of our Michigan's 4 R1 universities is, people are still very optimistic about the talent here in Michigan. People still believe in Michiganders. And I think the last point is, you're seeing companies that are focused on the customer experience still thrive. So I think that those companies, regardless of the industry, will always be able to manage the uncertainty.
Mary, you're in the trenches.
Yeah.
Tell us kind of your view of where business is right now based on your interaction with competitors and
So it's really interesting because you talked, Quentin, about what industry you're in, what segment you're in, and you have a different viewpoint. So as you know, I'm automotive, almost 100% automotive, and I sit on the board for MEMA, the Motor Equipment Manufacturers Association, for those of you that don't know. And we regularly send out these kind of surveys to our membership just to gauge on where things are happening, how policy is impacting us, how different things in the industry, BEV to ICE, all of these different changes take place. And you see sentiment bounce around quite a bit based on kind of the flavor of the day, what's happening. Right now, there's so much uncertainty, and that's the key word. Businesses don't like uncertainty, and it's a very difficult environment to plan for the future, to invest in the future, to make those CapEx decisions when you have so much uncertainty.
what would be the top 3 uncertainties?
I would say right now, policy obviously is the top. The regulatory changes that are happening at such a fast pace that you literally can't keep up with them. Tariffs, point in case. USMCA that's coming up. The uncertainty around, we've got so much disruption in the industry, going automotive specific, from ICE to BEV, back to ICE. There's so much capital investment that's already been made. How are we going to use that capital? How are we going to recover that capital?
Can you recover that?
Right, in some cases.
Some of it's
you're
sunk
seeing some
capital,
weakness.
right?
Absolutely. You see a lot of weaknesses in the industry because of that. I think General Motors just came out, and I'm going to get the numbers all wrong, but it was billions of dollars.
6 or 7 was the latest.
There you go. And that is going to have to be repaid to tier 1s, tier 2s that have made those capital investments. So it's all this uncertainty between policy, between the industry itself, and a lot, I think, having to do, too, with the way that AI and software-defined vehicles is starting to.
Well, and the only thing that seems to be certain is more uncertainty. Now you have the administration essentially declaring war on the Federal Reserve Chairman. And, you know, I think a lot of people thought that was a bridge too far, and now we're at that bridge. And we don't exactly know where it's going to lead, but Jerome Powell is not going to sit down and take it, I don't think. I'm interested in what if you could kind of set the numbers for us. I think having a conversation like this is always good to look at what the numbers tell us about where Michigan's economy is, its income per capita, educational attainment, some of the key metrics.
Sure. Yeah, so, you know, let me just start with the current data. You know, there are two ways of measuring employment in Michigan. There's actually more than two, but we focus on two, and they're telling totally different stories. And that's part of what makes everything a puzzle, you know, as we head into 2026. There's what we call resident employment or household employment. That's the count of employed Michigan residents. That includes the self-employed. That has been falling. It's down about 30,000 over the past 12 months through November. And then there's what we call payroll or wage and salary employment. That's the number of jobs in Michigan where people are working for a paycheck, so no self-employment. That has been rising. It's up about 40,000. So if you were to take the average, which would be, you know, one simple way to just try to get a read, that would say, you know, we have slow but positive growth right now in Michigan. I'm actually a little skeptical of those payroll numbers for some statistical reasons I won't get into, but so, you know, I would take the slight under on that. But so we have a very puzzling story about Michigan's labor market right now. So that's, I think, the backdrop to coming in to the year. As I said, we do expect to hit a little bit of a soft patch this year in terms of job growth, but picking up as we get into the back half of the year. You know, part of that is, you know, Mary talked about the uncertainty. You know, it really makes people, you know, shy to pull the trigger on major investments. We're hoping to get a little bit more clarity and certainty as we move through 2026. Daniel, you also mentioned, you know, income, and we actually did a big deep dive into Michigan's wages this past November at our Economic Outlook conference. And I think people don't appreciate in Michigan that Michigan really has fallen behind the United States in terms of average wages.
Right.
I read somewhere it was 87 cents per every dollar. Is that
right? So that's
right?
that's in the ballpark of the way that we sliced up the data, and you can measure it. That's exactly right. You know, when you look back to 1990, average wages in Michigan were about 10% higher than the U.S. average, and we're adjusting for the cost of living. So, you know, Mary said, well, 87 cents. Something that we'll get when we tell people about this is, well, but the cost of living is lower in Michigan, and that is true. The cost of living is lower in Michigan than nationally, but it does not make up the gap. So in our calculations, when you adjust for the cost of living being a little bit lower here in Michigan, we're still about 4% below the U.S. average. And that's, again, starting from 10% higher in 1990. So that's obviously a concerning trend. That's a longer-term trend. You know, that didn't just happen last year. It's not just a this year story, but it is something to keep our eyes on.
Do you have a sense as to where we would rank among the 50 states? I mean, I think that's always, you know, when you fall below Mississippi, you got problems.
Yeah, I don't have the exact ranking off the top of my head.
Sorry, Quentin.
I'm not from Mississippi.
I know.
Ma'am.
Louisiana, Mississippi, what's the difference?
Somewhere in the South.
But anyway, I'll get to that later. Go ahead,
Oh,
Doc.
sure. No, well, I'll just say we were sixth in 1990. You know, we're now substantially below the U.S. average. You know, I can talk about some of the sources just very briefly. You know, when you go back to 1990, our wage advantage, it came from blue-collar industries, from manufacturing, from production industries. That has really eroded. About two-thirds, more than two-thirds of that wage advantage relative to the nation has now eroded. And at the same time, a big wage gap has opened up in Michigan. If you look at, you know, high education, highly paid, you know, white-collar industries, we now have about $11,000 wage gap on average with the United States. So, you know, it's kind of two sources of the decline, and it is something that we need to think hard about. How will we reverse going forward?
Do you know whether Michigan is singular in this decline, or this is something that is shared with some other states? And if so, what states are they?
Yeah, you know, I don't like to pick on. Here's what I would
Well,
say.
I think we want to bring a little reality to the conversation.
Let me put it this way. I think that Michigan stands out in two ways. You know, Michigan really was. We were a top 10 state. We were, and if you know, I live in Ann Arbor. You know, obviously we're in Detroit now. If you think about 100 years ago, you know, in many ways, Michigan was truly the most prosperous place on earth. You know, I've seen estimates that Ann Arbor was truly the richest city on earth in the 1920s. And obviously we're not there now. So I think in that sense, you know, we are singular.
So my husband and I, actually, this is crazy timing. My husband and I had a conversation this past weekend at breakfast about where we were ranked and where we are now. And to answer that question, of course, ChatGPT in my back pocket.
There you go.
We ChatGPT'd, and we saw that Michigan is now ranked 40th. That was what popped up. Now, whether you take it with a grain of salt.
Per capita income?
Per capita income, 40th. And 20 years ago, 1999, I think we were ranked 16th. So that decline has happened over the last couple of decades.
So I throw this to the group. Do you think people appreciate, they understand this? Like my colleague Nolan Finley wrote a column, I thought was a very powerful column about 3 or 4 weeks ago on this very issue, and basically making the argument that this is what's happening with it. I think he used your numbers. This is what's happening. People don't really realize that this should be kind of a break the glass moment economically.
Well, I mean, I think that people do realize it, but the levers that affect it are so complex.
Yeah.
And, you talked about Mississippi or other southern states. The one thing I'll tell you about, as a Southerner, as a proud Southerner, I'm a native Floridian. If you know Northeast Florida, that is the South, Jacksonville. Floridians and Southerners have a hunger to defy the expectation. And I think that they play, whether it's their football or their politics or their economic development policy, with an edge. And I think it's hard when you've had so many years, and despite the challenges, trust and believe, there are states that would die to have Michigan's economy.
Right.
They would die to have our supply chain. They would die to have our automotive industry, our life science industry, our aerospace and defense sector. So it's hard to keep that edge. And, you see it in sports all the time. It's hard to repeat. Mm-hmm. And I think that's something that we have to grapple with as a state. The second thing I will say is I do think that you can be self-critical, you need to be relentlessly objective, but sometimes we in Michigan get into self-loathing. And what you begin to tell yourself becomes a self-fulfilling prophecy. And I always tell people, try to Texas text. If you've ever been on a plane, I say it all the time, to someone that's a native Texan or someone that moved to Texas, no matter whether they are fainting because of the heat or there's a snowstorm that's knocked out the power, they still believe in the power of Texas. And that power of the idea of a place, that's what's made America great. It's still the shining city on the hill, why people are dying to try to get here. And I think we have to incorporate that. And I think the final thing is our number one asset are still our people. And we've got some of the greatest universities, some of the greatest two-year colleges, and I think we still have to sort of figure out a way to pour into that. And that can be a tough investment, but it's a necessary investment. And it requires political will because you don't know whether an investment is going to pay off until 25 years later.
Well, I think you're right about the self-loathing. You see that in the reaction to the performance of the sports teams. And immediately there's a lot of, everything is falling apart. You see it, I think, the experience with what's happened, the long, slow recovery of Detroit. There are a lot of skeptics. I think there are a lot fewer skeptics today. And I think, I'm curious whether you see any positive markers in the data that are encouraging.
Yeah, I do, just thinking about the auto industry first, I do think it's important to acknowledge federal policy, in our estimation, has become more supportive for Michigan's auto industry recently. So certainly the tariff policy has become more favorable to domestic auto production. If you look at, what was announced last spring, early in the administration, we were very upfront. We thought that it would reduce domestic auto production. That would hurt Michigan. There have been changes to the tariff policy that we think should actually make the tariffs now a very slight net positive for domestic auto production. I want to say, we still expect the tariffs to add over $3,000 on average to the price of a car. So from an affordability perspective, it's not, it's still not a winner.
The average cost of a car right now is $48,000.
Right, that's right. Yeah.
That's the average cost.
That's right, and we're saying adding $3,000 on top of that.
It's twice what I paid for my first house.
So just to be upfront, listen, economists are there are very few things that unite economists like tariffs, that economists, by and large are very skeptical of tariffs. I'm not an exception, but I think it is my duty to call it how we see it. And I do think some of those changes in the longer run should help, mitigate that impact and in fact be a slight boost. The other thing I'll add, there have been changes to the so-called corporate average fuel economy standards, or the CAFE standards. There's no more financial penalties for those. That should boost Michigan. Very, very tasteful. But I just had to point, love that. But we expect the financial penalties for not complying with the CAFE standards have been removed for the time being. That should boost the Detroit 3 share of the market.
So were the tariffs? Were you wrong about the tariffs, or were the tariffs not as bad as advertised? I think it's a combination of the two, isn't it?
It's some of both, and they've changed policy. One of the big changes is they've extended the rebates for parts. That are used in domestic auto production, and that actually makes a big difference in our calculations. So.
Okay, Mary, you live in this world.
Yeah.
If there's one thing you wanted this audience to know about this whole tariff journey that you've been on for a year-ish.
Since 2018.
What would it be?
Tariffs are a tax on U.S. citizens. People don't realize that. Tariffs are not paid by foreign countries. You brought it up. It's an affordability issue. So while tariffs are generally going to help drive investment back into the U.S. and help push that, we cannot make everything here in the United States. We don't have the supply chains. To bring those supply chains back, people don't understand. An average vehicle has 30,000 components on it. Think about that, how many suppliers there are. The tariffs, while in the short term will definitely drive investment, in the long term, it is going to drive up the cost of vehicles, and it is going to make us uncompetitive with the rest of the world. Plain and simple. Short-term gain for the automotive industry. CAFE standards, you talked about that. This is great in the short term, but now there's no investments being made. We're going to be behind the 8 ball when it comes to EV with the rest of the world. So there is some short-term gain, but what we're giving up in the long term, which is the future of the automotive industry and the future of the U.S. automotive industry.
GM CEO Mary Barra last night did a press avail thing at the APA, and she talked about the difference between tariffs and the other policy changes, and said that the other policy changes, the policy whiplash that they've had to deal with CAFE, emissions, a whole host of things, was far more taxing on their organization than dealing with tariffs.
Yeah.
They had to deal with them. But let's talk for a second about the policy whiplash that we've seen from one administration to the next. I mean, you've done a 180 on EVs, done a 180 on government-supported incentives. There's a whole long list, and tariffs is a part of that list as well. But how difficult is it to manage the business when you're having government policy, big things being done, just handed to you? Say, this is the new normal.
Yeah, it's impossible. Businesses...
Impossible?
Businesses don't like uncertainty. So it delays CapEx. It delays any kind of investments. It's just delay. And it puts you in a position where you're scared to act because you just don't know what's going to change next. Or if this policy with the next administration is going to flip-flop. So your investment that you're making that is going to be profitable with this policy, next thing you know, 3-4 years down the road,
well,
it's a bad choice.
I think you've written about this. Doesn't this raise the question about your ability to be competitive? I mean, yes. One of my concerns is that we're going to retreat into what I call Fortress Midwest here. We're going to build trucks and SUVs, and the rest of the world where, a lot of the growth is anybody ever noticed that it's 15.6 units a year, it's 16 units a year, it's 15.8 units a year? So it doesn't sound like a lot of growth to me.
15.2, I think, was the final numbers for 2025.
But you get my point,
not to get too exact,
right?
but yeah.
Yeah, I mean, it's not, and so we're closing ourselves off potentially from growth from a lot of growing markets around the world.
I like to say that we're going to be sitting in our own little sandbox with our own toys saying, no, don't touch, it's my sandbox, so I'm going to play in here. But the sand is going to start flying out.
But that's not a good long-term position to take.
Sorry, one more final point on that. One of the biggest threats, especially for automotive, that we have is the rate at which China is basically eating our lunch when it comes to the automotive industry. The way that they are technology forward and just moving at a pace that we absolutely can't keep up with because their policy supports that, and our policies are holding us back, trying to keep us in the dark ages.
So how does this part of the long movie end?
I don't know. I'll hopefully be retired by then. Ask me.
Look, you know, I have to defer to Mary because she's living it every day, but I think you will have great business leaders like Mary who can tell you her own story, where they, amid this challenging environment, they found a way to create a entirely new business unit that was incredibly profitable, that they're now marketing. I'm a relentless optimist. You know, I'm a Black American. You can't be a Black American and not be anything but relentlessly optimistic. I wouldn't have been, my father, who is far brighter than me, wouldn't have been sitting here. So I think that we in America have always figured out how to figure it out. And I think a lot of it comes from three things. Political will. We have to give elected officials time to grow and to evolve into their roles. It's not flip-flopping if you change your position based upon new information. That's typically called wisdom.
Yeah,
and
but it's hard to sell politically, but I take your point.
But the point is, we get the government, we get the policy that we elect. So we have a responsibility to behave differently if we want a different set of outcomes, I would argue. And I think the other thing is, we can't be afraid of the world. You can't be afraid of competition.
No question.
And I think that's part of it. And I think we have to demand from political leadership at all levels to move away from this scarcity mentality. That has never been who America is. We've always believed we could create an ever-expanding pie. And I think we have to get back to that sensibility.
We're talking about policy consensus when it comes to the auto industry. I think also we see it with economic development in Michigan. I've been covering it since I came back from Europe. I've been covering, three different administrations who've all had dramatically different approaches to economic development. You're quarterbacking the latest approach. It seems to me that we have a lack of consensus on long-term economic development strategies. Is that this partisan kind of back and forth, is that something we're also seeing at the state level, and it has an impact on who you are able to recruit and to invest in the state of Michigan?
I think to a certain extent, but I do think everyone, whether it's been, Governor Granholm or Governor Snyder or Governor Whitmer or even a Governor Engler, have all at some level believed in the importance of investing in talent. I think there's always, and that's been an element. I think there's always been an element of support for small and medium-sized businesses. There's been a support for, trying to bring back places that, commercial places that have been out of and off of tax rolls for years. I think where the consensus has swayed is at what level do we come alongside businesses to de-risk investment in a world in which capital is mobile. Capital is no longer as fixed to a particular location as it once was. And so we have to decide, are we going to base the fact that we have to compete for capital, or are we going to say, well, a certain company is going to give us a hometown discount? And we're not just need to talk about the automotive space. We can talk about life sciences. We can talk about agribusiness. We can talk about fintech. Companies are looking to where they can de-risk long-term CapEx investments. They always have, they always will, and we have to have policies that are responsive to that.
The southern states that you're familiar with, how is the economic development culture different, or where is it different than it has been, which you've learned and started to understand about Michigan?
It's easier.
It's easier?
Easier, because I think that There are still places in Michigan. I think most people in this room would say we want to grow economically. And I made the faulty assumption that most Michiganders felt that way. I still believe most Michiganders feel that way. But there are certain places in Michigan that are like, we're good. We don't really want to grow. We've either made our peace with whatever perceptions of their long-term growth or quality of place or whatever. And so you have to present the case as to why growth is a positive thing.
Is that new? Like the Ford Marshall, use that as an example. Is that new in your experience in Michigan or in states? I mean, have you seen that before, where big, major investments, job-creating investments, are opposed just because of where they would be?
I've never seen it before.
So
And I talk to my peers elsewhere. They're like, "Good luck with that, my friend." You know. I think it's. But you're beginning to see a little bit with, I think, a lot of the kerfuffle about data centers. And I think part of the challenge is we are at a point in society where it's very difficult to get aligned on the fact base. You can disagree, but at least get aligned on the fact base. And I think it's increasingly difficult, and we don't allow that alignment on the fact base.
I think that's very true. I want to go back to something you said about China. There was a story in the Wall Street Journal last week, maybe 2 weeks ago, quoting a executive from Geely from China saying that they plan to build a plant in the United States. 0 to 100, what do you think the chances are that that actually happens?
In the high 90s.
And do you think it would happen while President Trump is still in the White House?
You know, that's a tough one. I think he's actually said before, I could be wrong, but as long as they're bringing investments, they're bringing the money, creating the jobs and bringing the investments, that's what he wants to create here. When you look back to when Japanese automakers came into the market, I think that it's just a matter of time. It's inevitable that's going to happen. Now, definitely cars coming across from China. I don't see that happening anytime soon.
No, I don't either.
Right, because of the tariffs and what'll happen there, there'll be enough regulations in place that we won't see that. But opening up our doors to those automakers that are willing to come here and hire American workers and invest in the United States and create jobs and keep that money here, then yes, I think there's a very good possibility of that.
I was somewhat shocked, and I wrote about it at the time. The president came during the last campaign, came to Flint and basically said, stop building EVs, the Chinese have won, it's over.
Give up.
Just give up. And it was kind of bracing, but I think it could be indicative. We're about out of time here. Final thoughts?
Final thoughts? You know, I have to go back to what Quentin said. I am cautiously optimistic. Where there's a will, there's a way. I think that, this is another catchphrase where I always like to say, and my team probably hates to hear it, but where there's chaos, there's opportunity. And I think that we in Metro Detroit, we as a state have that ability to take what we have here and build upon it. You know, automotive, yes, it's an 11 million, we employ 11 million around the nation, but there's that opportunity to pivot, to get into aerospace, to get into humanoid robots, to get into eVTOL. So there's all this opportunity that we have to capitalize on right now. And I really think that Michigan as a whole is poised to do that.
Any final thoughts, Gabe?
Yeah, listen, Michigan is a resilient place. Detroit is a resilient place. We've faced tougher times than this before. We've come out on the other side. As Quentin said, you know, our biggest resource is our people, our best resource. So I think as long as we keep investing in our people, we will come out okay. And I do expect brighter days as we move through the year and into 2027.
Journey said it best, don't stop believing.
There you go. On that note,
Love it.
thank you very much.
All right, thank you.
Nice job.
All right, These guys did an awesome job as always. I get to ask a couple of audience questions, and then we'll do some fun lightning round questions. And Daniel, you're going to be part of the lightning round too. I don't know if that's
Oh boy.
you, but,
Okay.
all right,
If you're
first
ready.
one. We always talk about how we need to diversify the economy in the state of Michigan. How reliant are we on auto as opposed to 10, 20, and 30 years ago? Maybe for all of you, but Quentin, maybe start?
Sure. I mean, I think that diversification, we always want to do that, but I think we can diversify within sector as well. We have, I would call the Michigan Four. I mean, we have in addition to the historic Big Three, we have significant presence of Toyota. I think we have to continue to try to add manufacturing capacity to support the R&D presence of the Korean, the Japanese, and German manufacturers. So I think you can diversify within the sector. One of the reasons why we went so aggressively into semiconductor, we also looked at sectors that have long supply chains so that we can have what we've enjoyed over the past 100 years. And then we also have to support fintech, insurance tech, things that are happening here in Metro Detroit as well, and look at the adjacent verticals. And I think that is a big part of why we miss, why automotive is so important. It is who it brought to the table here in Michigan, and we have to continue to support that.
Mary, anything to add?
I kind of said it at the last of my final thoughts, diversification. We have got such a strong manufacturing base here in Michigan from the roots of automotive coming up. And I really think that we have an opportunity to capitalize on it. I don't know if any of you were at CES, but I just came back from there last week, and it is absolutely incredible to walk around and see the future, because that's really what it is. I remember going to CES 3-4 years ago, and 3-4 years later, the tech that I saw is now part of our everyday life. So walking around, seeing these eVTOLs, which are the electric vehicles, the flying vehicles, the humanoid robots, my Lord, there were so many of that. I really think that Michigan has this opportunity with our brain power, with our manufacturing base, to lean hard into what is next. What is that next future that we can jump into for manufacturing?
Awesome. Gabe, while you're there, you want to add anything from an economist perspective?
One thing, the auto sector is a less major part of Michigan's economy. Still, an incredibly important part of Michigan's industry. We lost a lot of jobs when you go back to the first decade of the 2000s. We basically couldn't lose that many jobs again. People will ask, well, if we had a repeat of that experience, that would take us to negative. So, in that sense, we have diversified a little bit by subtraction. That sounds, negative, but also, a lot of growth in healthcare. The mortgage industry is a big industry. So, I really do think it's about investing in the talent, and the industries will come.
All right, next one. The current administration has disrupted our relationship with Canada. How has our trade been impacted, and how does it project into 2026? Maybe Gabe, starting with you?
Sure. Mary already touched on the USMCA renegotiation is coming up this year, and depending how you read it, sometimes it's called a review, sometimes it's called a renegotiation. I think it's going to be a little closer to the renegotiation. Listen, trade with Canada has helped make Michigan and the United States a richer and more prosperous place. Mm-hmm. An incredibly important ally, incredibly important trade partner. We really rely on the integrated North American market in the auto industry especially. And so I think that people are justifiably, nervous about what's in store for that renegotiation.
We export 1/3 of what we produce in the U.S. to Mexico and Canada. 1/3. So ripping up USMCA, which I hope doesn't happen. I hope it's a small renegotiation. But that number, it was crazy. When I was preparing for this, I read that number increased to 1/3 in 2020. From 2020 till now, that's increased 56%. And that was when the new USMCA went into effect. So USMCA has really done a great job in helping us with our trading partners with Mexico and Canada. And they're an important relationship that we really need to continue to nurture.
Agree. Quentin, anything?
I was just saying, in addition to the trade partnership, I think it's just the fact that you talk to our friends in northern Michigan and in UP, Canadians are not coming to visit. They're not spending dollars here. And I think that we sometimes have to get out of the transactional into the relational. I mean, they've tended to be our best friends, and we have to get back to understanding that things aren't just about getting a deal done, but it's about the long term.
Thank you. Question here about kind of touching on education, and I think it was touched on a little bit earlier, but Chicago has 325,000 young professionals with a college degree. Detroit has 25,000. So talk about keeping and recruiting this group and retaining, and just education in general, the importance. Maybe whoever wants to take that first.
Yeah, I think we should probably do it per capita too. I think the numbers are not going to be as dramatically if you did it on a per capita basis, but I think the reality of it is we have to ask ourselves, what are we saying to our young people? If we're complaining about the weather here, or we're complaining that the Lions still went 9-8 but didn't make the playoffs, and the Bears are better and everything, our young people are listening to us, and if we don't speak as if there is a future here in Michigan, or we're only stuck here and we would go to Chicago tomorrow, well, then of course they're going to go. Now, I think that we have to continue to support our great institutions of higher education here in Metro Detroit and in Michigan more broadly. I think Wayne State is one of the most underrated institutions, UD Mercy. I mean, there are some great schools here that we need to begin to figure out ways, and I know we have. The DEC has been a part of that by bringing young people to events like this. We have to figure out how to invest and show that we care, because if we don't show young people that they're going to care, they're going to go where they get the love, and they perceive the love to be elsewhere when actually I think there's a lot of love for them here.
I like that you had the Wayne State hat on when you made the Wayne State comment, so perfect. Others, any comments on education, the importance? We hear about it a ton from the chamber as well, so any thoughts?
Yeah, I think from, looking at an industry standpoint, I think it's very important that that business does its part in helping with that education. I sit on the board for Mesh Auto, and I know that we're working very hard to start at a young age and get students involved and show them the opportunities, not just in the automotive industry, but all the opportunities that Michigan really has to offer. And I'm not just talking higher education, right? We need skilled labor as well. So I think that we're falling behind in that. We really need to look at education as a whole. For so long, we pushed that college path, and now we're really struggling with that skilled labor. So I think that there's a big gap that we need to address still.
I'll just add from the perspective of being at the university, I think sometimes the University of Michigan in particular gets a little bit of a bad rap as, students come and then they leave Michigan. And the state of Michigan actually does better, I think, than a lot of people realize in terms of keeping college grads here in the state. Obviously, we do have people who, go to Chicago, go to the coasts. A lot of those people anecdotally come back. It's hard to track that officially in the data. But I think it was Richard Florida did some statistics, and I think he spoke about them at the Detroit Economic Club. The state of Michigan actually does a pretty good job of keeping college grads in state. And I think that there's a little bit of a misperception about that in terms of how much does the university system contribute. It's one of the greatest strengths we have here in Michigan is we've got fantastic public universities, and it's really something that I think we should be supporting going forward. So.
All right, this one I'm going to come to Gabe for kind of two questions combined. One is, are you concerned with an AI bubble in the stock market? And then your thoughts on a recession in 2026.
Sure. Just a recession first, it's always a risk. We are forecasting about 2.4% real GDP growth, so we are not forecasting a recession this year, actually growth picking up a little bit with the tax cuts. That will help to stimulate the economy in the short run. Listen, I used to forecast stock prices. When I was at the Congressional Budget Office, I had to be the guy writing in a number for stock prices. And I always used to say, listen, if I could forecast stock prices, I would be on Wall Street, right? So I wouldn't be doing the job I'm doing now. So I'm always skeptical when people start talking bubble. But at the same time, obviously, it's very frothy valuations. If that does come down, I think that it's a real risk for the economy. So I'd call it a risk.
Awesome. All right, I'm going to go kind of finish with the usual lightning round, which is a lot of fun here. So I'll start with maybe just going down the road. Daniel, you included. Your best sport growing up and today, Quentin.
Best sport growing up, baseball. Best sport today, sitting on my couch.
Best sport growing up, soccer. Best sport today, climbing.
Best sport growing up, hand-to-hand combat. I was in martial arts and I was an amateur boxer, and best sport today is still boxing. I enjoy it.
And I've seen her.
Yes, we see each other at the gym in the mornings.
At the gym. Football when I was young, and sea kayaking, and now.
Like it. Good answers. All right, we'll start maybe down there and then come back this way. A karaoke song that you can nail.
Oh my God. I have no
You can pass to
idea.
Mary, she's going to have one.
I have no idea. What do you?
All right, well, let's see. So on a day-to-day basis, I can barely remember my kids' names, but for some reason, when this song comes on, I sing every word, and it's Paul Revere by Beastie Boys. Every word.
I don't even know the song.
That's a little story. Sorry.
I'm always sheepish when I say this, but Girl, You'll Be a Woman Soon by Neil Diamond.
Oh, love it.
Oh my Lord.
Quentin, round us out.
Prince, Purple Rain.
Oh, there you go.
All right, those are good. We'll finish with the usual last question, which is advice to your 25-year-old self. Quentin?
Take risks, take calculated risks. Don't worry about what everybody else is doing by the time they're 28. And at the end of the day, it's not whether you make 30 under the 30, it's rather you have been at peace once you're over 50.
If you find a job you love, you'll never work a day in your life, and that means you've got to try a lot of different things and find that thing that you really love.
For me, it would be what other people think of you is none of your business. So believe in you and don't worry about what others think.
That's a good one. Do what you love and take care of yourself.
Awesome. Thank you.
Yeah.
Fantastic job. Quentin, Mary, Gabe, you crushed it. You're welcome back here anytime. Quentin, another strong hat game.
Yeah, I love it.
Can't wait to see what you bring next year. Daniel, David, Rick, thanks for your important roles and just your support of the club. So, ladies and gentlemen, so please listen to some really important instructions. It's a little unusual today, but we got to do what we got to do. We do invite you to a strolling lunch in the ballroom. You can't go through registration because that's where the mags are. You've got to go in that first room, right? You'll be escorted right through the first room into the ballroom, number one. If you have a ticket and a red wristband, because that means you have a ticket for the President Trump event at 2 o'clock, you still have to exit the room. You'll have to then re-enter the soundboard once doors open. We're shooting for an approximately 1:15 reopen. So that does give you some time to grab something quick in the ballroom, get back in line. It is open seating for that event. And one other huge favor, we're about to set a Guinness World Book of Records for the fastest soundboard exit. We've got to clear the room, everybody at 1:05. It is now 12:59. So we're gonna set that record. So I'm gonna finish like I usually do, on time, every time this meeting.